Hey, everybody. Welcome to Dream It Dose. I'm Jason Calacanis. As you may know, I'm an angel investor and entrepreneur and podcaster here in the Silicon Valley. And I run what is the largest angel syndicate in the world. You can see that at thesyndicate.com. And I'm pretty familiar with how angel investing works. You may have read my book, Angel, or come to my class, angel.university. And so let's get right into it. I'm going to give you some advice about angel investors specifically.
Dream It Ventures has been investing in great early-stage startups for over a decade. The Dream It Dose allows us to share best practices to help even more founders. Tell us about your great startup using the links below.
A question I get a lot is, what motivates angel investors? Great question. We see angel investors from a range of backgrounds. One very common angel investor archetype is people who were former founders, who sold their company, who did well, and they want to pay it forward. And so what motivates that person? Well, obviously, angel investing, there is a potential financial reward, but there are many places to get a financial reward, and these people have already, in all likelihood, become independently wealthy. So sure, they might want incremental wealth. They might want to invest their money wisely. But the truth is, affiliation, being affiliated with other winning teams is critically important for them. And they might also want to meet new founders and give them their advice. And that's a reward in and of itself, to be helpful to others. So you're going to see that with the founder class. Then you might see retirees come into angel investing. And you know what? They might be bored. They might be home and they might be bored. They've accumulated a lot of wealth, but they still want that action, right? They want to place those bets. And so they may want to have that rush of working with you to try to change the world against all odds. So there's a lot of different reasons that motivate people. Some people do it for status, right? There's a lot of status games going on in the world. People might want the status of having angel investor on their LinkedIn profile. So there's a number of different motivations. What is the best way to attract angel investors in 2020? The easiest way is to have a chart. If you have a chart where you're growing 20% a month, month over month, if you send that chart, the chart, to an angel investor, they are going to reply. So if they see your users going from 1,000 this month to 2,500 next month to 5,000 the next month, they might dig deeper. Then they see revenue growth. Oh, you went from 10,000 this month to 14,000 the next month, 40% month over month growth. And then you did 20% the next month, and you did 15 the next month, and you averaged something in the 20% range. They love that. Another thing that will attract an investor is if you have previously had success. So if you previously sold your company and you got a return for investors, that's also a massive checkbox in terms of credibility. So when you email somebody and say, I sold my company to Google for $15 million after 3 years, I'm now starting my next company, in their mind, what they're thinking is, oh, I wonder if this time they'll add a zero to the exit price. So if you've had previous success, you want to make sure you take credit for that. If you have current success, you want to make sure you take credit for that. What if you have no success right now? Well, maybe you should only email angels who know you and you have a reputation with, and you should bootstrap your way to getting your product out. If you just have an idea, I think it's a terrible time to go to angels. If you have a prototype, it's an okay time to come, but we're probably going to have limited success. It's when you have a couple of customers, when you have people using the product, that you've differentiated yourself. 90% of the people coming at angel investors have not gotten their product to market. You do not want to be in that bucket. You want to get your product to market, even if it's just an MVP, a minimum viable product, so that you in the credibility race are far ahead of that 90%. You want to be in that top 10%. And then of that top 10%, the people who get to the point of monetizing their users, well, that's going to be another 10% drop off. Right? 90% of people never get to that. So it's 1% out of the people who have ideas who maybe ever get a product to market and have some basic traction in terms of revenue. So that is my best advice. Why do angels do deals or not do deals? Yeah, this is an important one. People will look at edge cases and make them the norm without having complete information. So you will see a company like Clubhouse raise $10 million on a $100 million valuation, and you don't know the backstory there. So you say, well, I should be able to do that. I'll get $10 million. What you might not realize is those founders were entrepreneurs in residence at Benchmark, and they had a track record, and they had personal relationship with the VCs, and a marketplace broke out where people were bidding against each other. So this is an exception of an exception of exception. This is an outlier. Outliers are not how you should base your strategy on. That's like saying, I'm going to win this game by throwing a 100-yard pass from one end zone to the other. That's how I'm going to win the game. That is not a strategy. Angels will do the deal because they see traction and they see you credibly making your company better and better every month. So what you want to do is take a 1-year approach to working with investors, maybe even a 2 or 3 year approach when you're working with venture capitalists and seed funds. But with angels, take a year approach. You're introduced to them. They see your product. Maybe you go to an accelerator, you raise $150K in seed investing. You offer them. They say they're not interested. Then you get your product to market. You ask them, hey, when would you be interested in investing? They say, oh, when you get to 10,000 a month in revenue. You get to 8,000 a month in revenue. You say, hey, we're about to cross 10K. Would you like to get together in the next couple of weeks? Boom. Now you've shown that you're not going away, that you remember you made contact with them, and that you're playing the long game. Investing is about the long game. I tell angels when I'm training them how to angel invest, don't make rash decisions. Get to know the company, get to know the founder over a year. And you will probably have, if the company is successful, 3, 4, 5, 6 times in which you can invest. So take your time. You should also take your time with angels. And they will not do a deal because you don't have enough credibility with them yet. So build up your credibility over time and play the long game. And you can do that by sending monthly updates to people who passed on investing with you. That's my best piece of advice there. Another question, how do angel investors make money in a deal? There are 3 ways that angels get liquidity in a company. Number 1, there's a secondary sale. In other words, the company gets to $1 billion valuation and some large investor says, I would like to own even more of the company. Are there any angel investors who would like to cash in their chips? That's the secondary market. You saw that happen with Uber when Masayoshi-san made a tender offer to employees of the company and early investors. I was able to take advantage of that and sell him some shares in the company. The second way is the company gets bought by a bigger company. So when a company gets acquired, like YouTube did for $1.6 billion, all the angels get their money back. The third way is an IPO. So Uber went IPO. I had sold some shares when Uber had the secondary offering, and I obviously sold some shares when the company went public, and I still hold some shares. So that's how people get their liquidity. And then obviously SPACs are happening now. So we saw Desktop Metal, something we were an early angel investor in. They went public through a SPAC. So just another way of getting public, a special purpose acquisition corporation. But those are the 3 ways. And angels expect to have 80% of their deals go to zero. They're used to investing in 20, 30, 40 companies in order to have a chance at one outlier. It's those 1 in 10, 1 in 20, 1 in 30 that define the portfolio. So understand that as well. At what stage of their company should a founder start to fundraise for an angel round? Very simply, if you have had previous success and you have credibility from that, you can raise from just an idea. You have an idea on paper. You can just go out and say, hey, I have a new idea. Anybody want to put money in? Then there's another group of people who might be able to convince their friends and family, people who are associates, to take a flyer on them. And then there are people who maybe don't have those networks, right? And they are going to need to take a different path. They're going to need to bootstrap and prove some credibility through building product through their own skills. If you are like me and you did not come from a rich family, you're going to have to prove it some other way. The way I proved it when I launched my first magazine in the 90s was I made a photocopy magazine. It was literally a photocopy, 16 pages. It cost me maybe $1,500 to produce that first episode of the zine. I put those costs on my credit card. And then when I showed up to investors and then when I showed up to advertisers, I had credibility. I had a 16-page photocopy zine, Z-I-N-E, in my hands. And I could say, look at this. I did something in the world. And then people were attracted to that. That is a huge attractor. People who are in motion, people who are creating. So be one of those people and don't wait, create. So you can scrape and scrap and bootstrap your way into having a very modest MVP, and that will unlock a lot with angel investors. So I would only, if you're part of the no credibility group, the newcomers, the neophytes, you're going to want to put something down on paper. You're going to want to have something created in the world. Be part of the group that's making, not waiting. All right, so to wrap up, the best way to attract angels is to have a chart that goes up and to the right, to build something that is credible in the world, to have skills, right? And you can add skills. You can go on YouTube and learn anything these days. And angels are motivated by affiliation and being part of something. Some of them affiliated by the status of being an angel investor. Some people just love doing good in the world. Some people, it's a combination. And you really shouldn't start trying to raise an angel round until you have made something. Again, make an MVP, make something. And even if you're like, oh, well, I can't make something because I'm trying to make a vertical takeoff and landing vehicle. You certainly could make a prototype that is the size of a desk. for $1,000 or $2,000. You could make CAD drawings and make a 3D printed version of it. You could make something. So start making stuff and start having people look at what you made. That will draw people in, and that'll separate you from the people who are talkers. You go from being a talker to a walker. All right. I hope this has been helpful.